BlackRock Crypto ETF, How to Escape Financial Pain. In the uncertain yet fascinating world of Bitcoin, July 2023 brought a significant leap, with its value soaring past $30K for the first time since April. This surge, which happened in the latter half of the month, can largely be attributed to a regulatory filing made by BlackRock, the world's largest asset manager. BlackRock's plan to launch a spot Bitcoin ETF has caused quite a buzz. But what makes this a big deal, you may ask? And is approval certain? You will find out in the course of this video. Before we go into details of why BlackRock's recent involvement and actions in the crypto space are important and significant to BTC's sudden spike in value, let's take a quick detour and understand the context of ETFs. What are ETFs? ETFs, or exchange-traded funds, provide an easy way to invest in assets without owning them directly. They are like mutual funds, a pooled investment security. What's cool is they follow indexes, sectors, or commodities just like a tracker. But here's the twist. ETFs are traded on stock exchanges like regular stocks, so you can buy or sell them easily. They can track a single commodity's price or a mix of securities, even specific investment strategies. Quite versatile, right? Now, for traditional investors looking to invest in Bitcoin, ETFs offer two main benefits. Firstly, it simplifies the buying process, as they don't need to deal with crypto exchanges or wallets. Secondly, it shows that BlackRock believes in Bitcoin's long-term potential, which is a big deal since they were skeptical in the past and now have had a change of mind. Currently, U.S. investors can't access spot Bitcoin ETFs, but they can invest in Bitcoin ETFs that track futures contracts. However, these products have had trouble accurately tracking Bitcoin's price. A spot Bitcoin ETF would involve actual BTC purchases backing up the ETF shares, which could lead to a price increase. The proposed BlackRock spot Bitcoin ETF would likely have lower fees than available futures ETFs, making it more attractive to investors. It would provide a simple, affordable, and secure way to invest in Bitcoin while pushing up BTC's price due to actual purchases. To really understand what's going on, you need to understand what BlackRock is and what they plan to do, since their involvement and actions are significant because they are a major player in the financial world, especially when it relates to cryptocurrency. Their CEO's past skepticism about Bitcoin has now been set aside, showing Bitcoin's growing appeal to many people. If approved, BlackRock will need to accumulate BTC to back up its ETF shares. What is BlackRock? BlackRock is easily the world's biggest asset manager, handling a whopping $9 trillion in assets under management, AUM. That's like a ginormous vault filled with money, you know. BlackRock is a major player in the U.S. ETF market, having about a third of it all to itself. When they file for an ETF, exchange-traded fund, the financial world takes notice like, whoa, what's BlackRock up to now? And get this, they've got an incredible track record of getting their ETFs approved by the Securities and Exchange Commission, SEC, the folks in charge of this stuff. The SEC hasn't been too keen on cryptocurrencies lately, but BlackRock's not giving up. They're trying to launch their own Bitcoin ETF called the iShares Bitcoin Trust. It's not their first attempt, mind you. This is their 28th go at it, with the first 27 being rejected or stuck in limbo. But BlackRock's determined, like a bulldog with a bone. Or any other analogy for very determined you can think of. So, with BlackRock stepping into the ring, we've got eyes on the SEC and fingers crossed for a positive outcome. But why now? Well, it's all because of some interesting developments in the crypto world. First off, the SEC has been tightening its grip on the crypto industry. With other companies failing to get their ETF applications approved in the past, you might wonder why BlackRock is giving it a shot now. We can't be certain, but there are some possible explanations. One reason could be the competition from other jurisdictions. Europe, for instance, has already passed a groundbreaking crypto regulatory framework called MiCA, putting the EU ahead of the U.S. in creating a clean regulatory environment for digital assets. The UK, Hong Kong, and UAE are also making strides in this direction. If the U.S. lags behind, financial institutions here might lose out as the crypto industry moves to more friendly shores like Canada, which already has spot Bitcoin ETFs available to investors. Another factor is that other traditional finance players are stepping into the crypto game. Companies like Prometheum and EDX Markets have made moves in the crypto space, backed by big names like Fidelity, Charles Schwab, and Citadel Securities. But there's more. The SEC has been concerned about manipulation and fraud in the Bitcoin markets. BlackRock believes it can ease its fears by using a surveillance sharing agreement with Nasdaq, allowing them to monitor trading activity and customer information more closely. Despite these efforts, some experts remain skeptical about whether BlackRock's ETF will get the green light from the SEC. Industry veterans argue that previous applicants were also willing to enter their surveillance sharing agreements, just that BlackRock put it on paper. The real strength of BlackRock's application might lie in its reputation as the biggest player in the traditional finance world, instilling confidence in its ability to offer a safe spot Bitcoin ETF. Some speculate that BlackRock might have received inside information from the SEC about what's needed for approval, and the timing of their application seems favorable. With a whopping $9 trillion in assets under management, they might have access to insights that the rest of us don't. Or, wait a minute, could it be their choice of a custodian of the ETF's BTC holding? In case you're not aware, BlackRock's choice of a custodian for the ETF's BTC holdings. And guess who it is? Coinbase. Now, this is a bit of a double-edged sword. On the one hand, Coinbase seems like a natural pick for BlackRock. They already have a strong relationship, and Coinbase has been putting in the effort to navigate the regulatory landscape responsibly. Unlike some other exchanges, they haven't been tangled up in hacking or mismanagement scandals. So their record is pretty much spotless. But here's the twist. The SEC, that's the Securities and Exchange Commission, has its eyes firmly fixed on Coinbase. They're suing the exchange, claiming it operated as an unregistered broker. Plus, the SEC believes that many of the cryptocurrencies available on Coinbase could be considered securities. Even as we speak, trouble still exists and brews for Coinbase. The U.S. SEC asked Coinbase to halt trading in all cryptocurrencies, except for Bitcoin, before filing a lawsuit against them in June. Coinbase's CEO, Brian Armstrong, revealed that they felt cornered by the SEC's demand. If they have compiled and delisted all assets except Bitcoin, it could have spelled the end of the crypto industry in the U.S. That's a big deal. So instead of giving in, Coinbase decided to take the matter to court to seek clarity on the situation. The SEC has accused Coinbase of operating illegally because they failed to register as an exchange. On top of that, the SEC claimed that Coinbase traded at least 13 crypto assets that should have been registered as securities, including well-known tokens like Solana, Cardano, and Polygon. Interestingly, the SEC denied formally requesting companies to delist any crypto assets. Quite a puzzling situation, isn't it? It's essential for us to stay informed about such developments. This incident could have significant implications for the entire crypto industry. So let's keep an eye on how this situation unfolds and its potential impact on cryptocurrency prices. In the meantime, let's continue with why BlackRock chose Coinbase, which is interesting because BlackRock had another option. BNY Mellon, the oldest and most trusted bank in the USA. They could have gone with a safe bet, right? But instead, they placed their confidence in Coinbase. It's quite a bold move, and it shows that BlackRock believes in Coinbase's potential despite the ongoing SEC scrutiny. It is therefore safe to say that BlackRock must have weighed the pros and cons and made a decision they feel is right for their BTC holdings. As for us, well, it's fascinating to watch this all unfold. It's like a financial chess match, and we're curious to see how it plays out. BlackRock and Coinbase are both giants in their fields, and their collaboration adds a new layer of excitement to the cryptocurrency world. But let's be honest, this isn't a decision without risks. The SEC's case against Coinbase could have implications for the entire industry. It's a critical moment for the crypto space, and all eyes are on how things progress. So, what does this mean for the average investor? What is the potential impact of an SEC-approved spot Bitcoin ETF on BTC's price? And what happens if no approval is gotten? Before we answer this, remember that this is not a piece of financial advice. However, if the SEC gives BlackRock's approval the green light, it'll likely push up BTC's price. Check this out. BlackRock's filing has sparked a flurry of activity among other companies like Invesco and WisdomTree renewing their ETF applications, and Fidelity entering the crypto marketplace with its futures ETF. The involvement of these big names will lead to increased buying pressure, which could be positive for BTC's price. History suggests that the approval of Fidelity's Bitcoin futures ETF during the 2021 bull run brought in a whopping $1 billion in just 2 days. Memories of the past bull market. Though we're currently in a bear market, the thumbs up from BlackRock could still lead to a bullish outcome. But what if BlackRock's application is denied? That might cause a knock on BTC's price, canceling out recent gains, and it could make it tough for any other spot Bitcoin ETF to get approval soon. But to think of it more critically, if BlackRock, the world's largest and most influential asset manager with more than $9 trillion in assets, can make it happen, who can? That's a great question that needs to be answered. Sadly, we don't have the answers to it. Another question arises, this one, we most likely have the answers for them, and it has to do with the process and the proposed date of approval. I know you, like every other person, probably says, what is the approval process like? What does it entail? How long will it take? Who gives the approval? And when will we find out about the approval? So let me break the process down for you. Once the application is published in the Federal Register, the United States SEC has 45 days to either approve, reject, or extend the review. They can extend multiple times, but we'll get an answer by February 23, 2024 at the latest. However, it's more likely to get approved if it's passed before the first deadline, which is August 12. So you might see some price fluctuations around that date. Again, this is not financial advice. Now, you must be wondering what the chances of BlackRock getting the approval is. Well, it's a bit uncertain. Some experts believe the odds are good, while others are divided on this. Bloomberg thinks it's 50-50, considering that BlackRock's status is in favor, but they also caution about Coinbase's size and regulation. Personally, I'm cautiously optimistic about BlackRock as a big player, and they wouldn't have applied if they weren't confident. But remember, the SEC can be unpredictable. So, if you want to stay updated on this, make sure to hit that like and subscribe button for any future updates. We'll keep you informed on any new developments. Stay tuned and let's see how it all unfolds.